Good morning. My name is Brian Johnson, and today I'd like to talk about business money management and the effect it has on the forex. And I think some of the ideas expressed here may shock you and surprise you. Earlier in all the videos, I showed you how easy it was to print money using the Pitbull Traders trading platform, and it was quite simple that we use the bottom of the thing. Also, I said how easy it is to print money, and I just want to show you this, that printing money is relatively easy. One can do it quite simply. And here is a account that I'm showing you in demo, that it was opened on the 1st of the 12th for 50,000, and we made some Australian dollar US dollar trades to show you the effects of rollover drawdown. Now this couple of days we've been doing the last 2 days I've been just showing you how easy it is to just non-stop print money. See the 12th and the 12th, and we make about 54 trades during that time, and we finish up with a balance for that of $1,807. It's just printing money. Anyone can do it. The forex relies, in my opinion, on business management. That is, the equity, the original opening balance was 50,000. The sales growth, which was 1,807. And of course, we want to know the turnover factor. That is, as the forex moves in a circle, that is profit, loss, profit, loss, profit, loss, non-stop. So anyone knowing the basics can, and knowing the trend, can make money in the forex. Printing money is no problem. As you can see here, we've just simply printed money. It's no skill involved. It's pure printing money. But in all trading, it's controlling the drawdown. And let's talk some facts and Turkey. Okay, this is using a basic EA printing money. It's just based on my normal theory of loss, profit, loss. And it's just following the thing. So it's making it easy for us to see it. One can do it manually. I've done it thousands of times before. So simply here is the balance, and here is a drawdown. So we've made $1,800 worth of sales to 545 drawdown, which is about 2 to 1, huh? But imagine if we made 1,800 sales and we had 1,800 drawdown here, we would be in a lost position if it all liquidated at the same time. In other words, we liquidated every one of these at the same time. We would lose money. So you have to have better than 1-to-1 turnover factor. That means you have to have at least, try to get 2. So 400 drawdown, 500 drawdown is 2,000 sales, is 2 to 1, right? Okay, this is not a good example because we're also trying to get the Australian dollar into swap interest accounts, and we're using the Australian dollar and position averaging included in this trading technique of printing money and trying to control our swap interest over time. We hope that with these three, they'll give us about $80 a week just swap interest. Would be nice, huh? Yep. Okay, so we're looking at a swap interest account, and there's an Australian dollar, just using some of the techniques I've described earlier in Boston's average and the square. Okay, so what are we doing? We're looking at making sales to drawdown. Now, of course, when the sales to the drawdown get to a ratio of, say, 1.5, it's just breaking even, really. You need a sales turnover of 2 to 1 drawdown, and this is what we have been talking about, drawdown control. So let's look at it. So what happens? What does this imply to you? That in business management, we look at the equity, which was 50,000, the growth was 1,807, and the drawdown is currently 394. As the sales continue to go up and the drawdown goes down, our sales to equity, sales to drawdown become better. This is just like, imagine owning a business and this is your stock. So you never want your stock to have so much stock that you're in danger of going broke. This is what happens to most forex traders. 95% of them go broke. A lot of them use stop losses, which don't exist in businesses, but what this really shows you is your hit rate of stop losses. If we've got a 100% hit rate here, imagine with a stop loss hit rate, you need about 4 to 1. So 4 sales to 1 stop loss. It's virtually putting a hit rate very high in your vocabulary. Otherwise, over time, you just go broke. Seriously, you go broke because your sales don't cover, and I hate to say it, stop losses end up as losses. The forex is really based on the trades continually going in a stop loss circle fashion. So by having stock on your shelf like a business, see, we have all these stock on our shelf sitting here like a business. When they go into profit, we're just simply taking the profit. So the implication of turnover factor is so important that you control your turnover factor, your sales to your drawdown, or in business we would call this your overdraft facility. You're using other people's money. You're using the bank's money in business. And all this is doing is really teaching you business management. And think of it like this: equity, sales, which is at 1,860, stock, which is cost you $417 to finance your sales. It's based on drawdown, overdraft facility. We never want to see this go out of balance to a 1-to-1, because that's if you liquidate, you actually lose money. And it's important to know that when this gets out of balance, you simply have to stop trading and revert back, and we'll do it now, revert back to Brian John's Pitbull Trader for Dummies, and we'll open it up. Once again, I want to remind you that there are certain principles in managing drawdown. And how you print money is clearly shown there, and managing the drawdown. And we would keep talking about turnover, sales, stock turnover ratios. And to learn drawdown is a simple matter of having a maximum order of 12, although we've pretty well got to that on this, haven't we? Maximum margin set, maximum to the limit you use. Drawdown is greater, is 3. Drawdown is greater than 10% of your account. Stop trading. We certainly haven't got to that yet. See profit, take profit, reduce your exposure. Before taking profit, see drawdown going down to a minimum below current BT profit trade now showing. 6 profit should equal cost, 15 pips minimum, and 7 the trading range. So and right down in the other point, and bias control. We want to see if we are in what situation we are at the time, that when the drawdown gets to a level, we want to make sure that our buys and sells are equal. Well, what are they now? We have 1, 2, 3, 4, 5, 6, 7, 8 buys, 1, 2, 3, 4, 5, 6 sells. So the current trend is showing bias trend, Well, here's now how many buys: 1, 2, 3, 4, 5, 6, 7, 8, 9, and sells. So we're higher buyer sells. It's a very easy system. Printing money is easy. Anyone can print money. You want proof? Yeah, you can have a simple EA that does it. It just prints non-stop money. Well, what you're really looking at is your sales growth to your drawdown. Ideally, we like to get at least 2 to 1. So, in other words, if that was 400, 500 times 2 is 1,000, and the 1,000 drawdown, we've got nearly 2,000 sales. So we're getting close to the ideal situation. Having stock on the shelf is like any good business. If you haven't got stock, how can you sell? A customer comes in and wants to buy, and we're not worried about the individual drawdown because remember I said it just keeps going round from profit, loss, profit. What we're concerned on is drawdown figure. This drawdown should keep you in control of your sales. There's no difference in trading this than as a business management. It's showing you that we need 2 to 1 sales to be profitable. Imagine if that was 52,000 2,000 sales and 2,000 drawdown, you're going nowhere. You're going broke. That's it. If you're at 1 to 5, 1.5, you're just breaking even. So we like to try and keep our figures at 2 or greater. It's surprising most people don't look at accounts and managing accounts on actual ratios of sales to drawdown, to stop losses, whatever they use. That's not business management. But business management, it's easy. Anyone can make 100% hit rate. Believe me, I can train anyone to do that. The method that you use in indicators, etc., etc., is just another means of helping you get there. But it's so easy. If the trades, and you have the trend that go loss, profit, loss, it happens in the broker's hedge, it happens in longer term trading. It's not whether these are good trades now, they generally turn into trades. When they make a profit, you just take the profit. No. So we're not taking these profits on the Australian dollar. Look how the Australian dollar is helping to pay the interest on these other trades. This is just one method of trading, is using the interest rate that gives you the trades. And if you want to look at it in the account history, we started off doing just that, showing people how you can make good trades using the swap interest, using swap interest to carry trade where most of the profits go. And those trades were just position averaging and using the Bosun's lines. So it's pretty easy trading, isn't it? Nothing complicated. Just the fact that we go loss, profit, loss, and we always try and keep this round about 2 to 1 ratio. This is not a high drawdown. We're paying for our stock, which is here, and we're waiting for trades to come up. The trades are heavily weighted for the Australian dollar, as you can see, and that's just where the money flow is really, really going in the future. We've got to look at money flow. There it is up here. It's costing us a bit of money, but it's run up to the rollover and the triple swap, and they should help us with the sales. Okay, that's all, but just keep remembering the importance. Drawdown is really having business management in a simple format is equity, sales growth. Equity was 50,000. You saw that here. It was opening at equity at 50,000. The sales growth is 1,816 and the drawdown is 506. It's a little high, but the sales will start to build up and the stock will go down. God bless you from Brian. I hope you enjoyed this video, but I want to impress on you. Forex trading is a risky business. 95% of traders lose money trading the forex. Only 5% make money. It's very similar to the ratio of business, finance, and management. In businesses, 95% of businesses go broke in their first year of trading. They make a lot of businesses do the same thing. They make a lot of sales, but don't think about replacing their sales with stock. Don't look about what the turnover ratios are. These are reasons, some of the reasons businesses fail in the first year. Also, they have too much stock in hand to their sales. They lose control of their sales to stock turnover ratios. Some just sell off and have profits and don't have any stock. So guess what happens? They don't develop any sales. We're in the business of making sales. We're in the business of having sales growth. We're in the business of controlling our sales to our stock levels at 2-to-1 level. Remember, 1-to-1 is getting a bit close to the bone. You've got nowhere to go, and you should try and get it down to a target level of 2-to-1, so you have 2 sales to every 1. In other words, we have 2,000 sales and we have 500 stock. So we're a little bit over. Okay, that's just my way of telling you, have fun trading the forex. Think about when you do use other management tools that you always retain a 2-to-1 balance, at least 2 sales to 1 stock, 1 loss, which is profit loss is always a loss. It doesn't exist in businesses, but some people trade that way. There's no right or wrong way of trading the forex. This is just my way. And as I keep saying, a lot of people make big deals of signals, and that is easy enough to make 100% trading in sales. It's just the real art of trading is controlling this figure here to have enough sales to support your stock. And I believe in trading using stop losses. One needs at least 4 times the sales to the stop losses. It doesn't help. It makes it hard for business trading. This is my way of trading the forex. It's not suitable for everyone. Have fun, make money. God bless from Brian.